Okay, and we are live. So hello again. Welcome to another Red Cloud webinar. My name is Kobe Kushner. I'm a mining analyst here at Red Cloud, and today we're going to be talking about mine tailings with EnviroGold Global. With us today is Dr. Mark Thorpe, CEO and Director of EnviroGold, and he's joined by Senior VP, JC. So EnviroGold is focused on reprocessing mine tailings. For those who don't know, tailings are a byproduct of mining. After ore has been mined, brought to surface, crushed, milled, and processed, the economic material of interest is usually separated and concentrated before being shipped off-site. The remaining unrecovered mill feed is called tailings, which is placed either in dedicated tailings impoundments, so that's ponds or dams, but historically tailings were also often dumped into natural bodies of water. Tailings almost always pose some type of environmental risk, as they tend to contain some pretty nasty stuff, things like heavy metals, acid-generating sulfides, cyanide, radioactive material. The list goes on. Therefore, it could be environmentally disastrous if these tailings sites were to be improperly managed. However, because mill recoveries are never 100%, tailings can contain high concentrations of valuable metals, which may be economic to extract. And this is where EnviroGold has positioned itself. The company plans to tap into this opportunity by reprocessing mine tailings while reclaiming the tailings site in the process. So during today's webinar, the EnviroGold team is going to tell us how they're going to do this and provide us with an overview and outlook for what's ahead. And when they're done the presentation, we'll move on to the Q&A session. And just a reminder to everyone on the line that you can type your questions into the comment box at any time. As always, we do have to first run through the fine print. So during today's webinar, forward-looking statements may be made. I would direct listeners to the forward-looking statements outlined on page 2 of the company's corporate deck, which we will see in a bit. And for Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures on EnviroGold. And with that, I will now turn it over to the EnviroGold team.
Thank you, Kobe. It's a real pleasure to be with everybody this afternoon, and thank you for taking time to join us. We go through about 15 to 20 minutes on the presentation. Both JC and I will do the presentation. We're going to be looking at the company and the technology, how we deploy it, and then we'll give you an overview of the team. And with that, I'll hand it over to JC to give us a little bit of background. Thank you.
Thanks a lot, Mark, and thanks Kobe and Red Cloud for hosting. We always like to thank everyone for tuning in today and investing their most valuable resource, which is obviously time and learning about our story. It's a really interesting and exciting story. It's a story about metals without mining, and in many ways, it begins with a dilemma. We know the world demands more metals. The clean energy transition, like it or love it, EVs are taking over. There will be a transition to clean energy. Billions of tons of metals are going to be required for the transitions that are taking place globally. So the world wants more metals, needs more metals, doesn't necessarily want more mining. And I just want to point out, we're very much pro-mining here at EnviroGold Global. We see ourselves as complementary to traditional mining. Most of us on the team have an extractive mining background. However, we're cognizant of the fact that mining is facing real challenges. And the reality is that the increases in demand for precious and critical metals will not be satisfied by mining alone. And that's where EnviroGold Global comes in. We apply proprietary technology to reprocess mine waste, recover precious and critical materials, and reduce environmental liabilities. So it's really a phenomenal play on the circular economy. We'll just skip ahead to this next slide here, and you can take a look at the size of the opportunity that we are capitalizing on. So currently today, there are 280 billion metric tons of tailings sitting on the surface of the earth. There's about 13 billion metric tons of tailings that are generated annually. So there's a tremendous amount of this stuff. There's over $3.4 trillion worth of metals in global tailings. So there's a huge economic value to be unlocked here. And EnviroGold Global, we're very, very specific in what we're looking for. Most tailings projects are not going to make attractive projects for us. We have about 36 characteristics that we use to screen tailings projects. We're typically looking for projects that are in the area of 6 million metric tons, in the area of $124 per ton of gross recoverable metal value. And what we found in analyzing in detail over 325 different tailing sites is that the tailing sites that tend to be in our sweet spot are refractory, meaning that the original ore was resistant to conventional metal recovery. We do tend to find a sweet spot in the polymetallic, the volcanogenic massive sulfide, VMS, highly pyritic ores. And the reason being that those ores tend to contain a lot of residual metals. And we'll take a look at some of our project and you'll see just the size of the residual resource that exists at a lot of these sites globally. So EnviroGold Global, our business strategy is reprocessing mine waste, recovering high value, precious and critical metals. That is our near-term focus. We expect to generate free cash flow in 2023. We'll take a look at our projects here in just a moment. And then looking ahead to the future, we intend to leverage our robust intellectual property portfolio to capitalize on other circular economy opportunities. But today it's all about generating free cash through the reprocessing of tailings at our various tailings projects we'll look at here in just a moment. So our business model, as Kobe mentioned, is a lot different than what you've seen in the past. We really are a technology company at heart. So we don't typically own the assets. We partner with site owners. We implement our technology. We then generate revenues through a profit sharing agreement with site owners, creating a really strong value proposition. We basically transform a liability into a cash flow producing asset. We have 8 major tailings projects in our pipeline today, identified projects that are in various stages of either commercial negotiation or technical review. There's $10 billion worth of metals represented in these tailing sites, 2 projects under definitive binding agreements to implement tailing reprocessing operations. And we expect to announce a 3rd project in the 4th quarter of this year. So we've really developed quite a nice project portfolio. We do expect to be able to get these projects into production in parallel, leveraging strategic partnerships. We announced earlier this year a partnership with Sedgman, one of the world's leading project delivery and project lifecycle management firms. So it's all about getting these projects into production at scale, implementing our technology, and it begins in 2023 with our Hellyer Tailings project. A couple of comments on our intellectual property, and we can dive into this if there are any questions. But really, there's 3 strategic pillars, if you will, that govern create sort of the basis for our intellectual property strategy: resource recovery, resource beneficiation, contaminant removal. Resource recovery is all about recovering high value metals from mine waste, from reprocessing tailings, as we've discussed. The resource beneficiation, improving efficiencies for iron ore producers, and then the contaminant removal, removing contaminants of significant concern from mine and industrial sites. And if you look there at the bottom, the strategic horizons, just kind of highlighting our focus, generating free cash flow beginning next year. We'll talk a little bit more about that in just a minute. But then in the future, expanding into these other high value areas, leveraging our substantial technology portfolio. So with that, I'll turn it over to Mark and we'll get into the meat of basically a technology application case study.
Thanks, JC. Much appreciated. And as JC mentioned, we have 2 projects under definitive agreement, the Helia Project and the Buckens River Delta Project. We'll focus this afternoon on the Helia Project, and the 3rd project that JC alluded to was as a Mexico project that we're negotiating on the final agreement there. So very excited about that, and we'll have a look at how we deploy the technology this afternoon. So having a look at Helia itself, Helia was a mine that operated in Tasmania, produced 15 million tons of ore, and shut down in 2010. There have been various restart efforts to get it going again, and there's a tremendous amount of value in the tailings, and the tailings are very pyritic. There's about 35% pyrite, a little bit more than that, across the tailings, which has obviously the environmental concerns over acidic drainage or the potential for acidic drainage. We're going to be deploying our technology there. We're expecting to do that in 2023. And we've had a long and interesting history with Hellyer. We were asked a couple of years ago to help them out as they couldn't get any of the other more conventional VMS treatment options to work. They're currently retreating the tailings to float a concentrate for lead and for zinc. But having a look at the tailings themselves, there's a tremendous amount of value in these tailings. There's a lot of metal. There's enough zinc to build 700 solar parks. I mean, it's a tremendous effort. The work that we have done has identified a process that will allow us to recover more than 80% of the remnant gold and more than 90% of the remnant silver. And in the box on the lower right there, you can see the amount of metal in total tons. I mean, the quantities are staggering. I mean, almost 23 million ounces of silver and over 600,000 ounces of gold. So our technology application that we've developed, we've taken an acid leach that used to be done at high pressure and high temperature, and we've developed it to allow us to do it at relatively low temperature. The optimal temperature for the reaction to occur is around 85 Celsius, and we can do it at atmospheric pressure, which is really nice because it obviously affects the constructability and operability of the process. It's a double acid leach with recycling of the catalysts, and that's kind of the secret sauce, if you like, from EnviroGold's perspective, is that we break down these refractory pyrite matrices, liberate the base metals into solution, and then we can take the residues to produce a gold and silver doré. And then we can recover copper and zinc from solution, and we're working on the recovery of lead as well. So it's a very relatively simple process. The chemistry is a bit complicated, but the recycling of the catalysts is the piece that we've really brought to the fore. What does that look like, and where are we going with this? We're really looking to finalize the processing agreement that we've got. That's done. We've got the partnerships with Sedgman, as JC mentioned, and we just completed a fairly extensive in-house assessment of a small-scale pilot plant that validated all of the information that we'd previously obtained from Core Resources, and we worked with Core Resources out of Brisbane. The next step is to do a pilot scale, a larger scale, 100 kilos a day pilot scale, and then start to deploy, finalize the engineering and start to deploy the project at site. It's a 9-year project life, about 9 million tons with payable sales in the $1.7 billion range. So a tremendous NPV of about 250 million with a capex of about 82 million. So it's with an operating cost of around $75 a ton. There's plenty of room in there for profit for everybody. So it's a very nice project. It's a fantastic opportunity for us. Looking at our more global, if you like, strategic milestones through 2023. Let's get this pilot plant up and running for the Helia tailings. We will be publishing a technical report on Helia that provides independently validated by QPs, OPEX and CAPEX. We're working with 2 other potential tailings operations. As I mentioned, one of them is in very final piece of negotiations right now. We'll run the independent pilot plant for Hellyer, and then we'll move through the standard pre-feas and definitive feasibility study for Hellyer, with engineering and construction to go at the end of that. And with that, I'll pass it back over to JC.
Thanks, Mark. So we'll just kind of summarize the presentation here by looking at some of the compelling reasons to consider EnviroGold Global for exposure to precious critical metals and environmental sustainability. And then we'll look at the team, which is really, Mark covered the Helia Project, which is a tremendous asset, but we believe our team is our biggest asset. So we'll just look at a couple of items, and then we'll turn it over to the audience for some Q&A. I see we've got some questions already coming up, which is great. So reasons to invest. First of all, our first technology deployment at the Hellyer Tailings project, tremendous net present value there, $247 million. That's coming from the Red Cloud independent analyst report. We are expecting to generate cash flow in 2023. And I'll just go ahead and address one of the questions I see in the chat, which is asking about the timeline for production at the Hellyer project. And I think, certain investors that have been following our story see that, we originally expected to be in production as early as this year. We've now shifted that out a few months into next year. And why is that? Well, at our core, we are a technology company, not a mining company. And so, based on guidance that we'd received and expectations that we had as a company, we anticipated that given that we weren't a mining company, we didn't own the resources, we wouldn't need to go through the traditional kind of staged gate development processes, sort of pre-fees, definitive fees, et cetera, in order to obtain project financing. And what we found is that there's value in taking that staged gate approach in multiple ways. For one, it makes project financing, which is sort of that large CapEx investment that we were looking at earlier, makes that much easier to obtain. But it also generates news flow and creates a sort of a breadcrumb approach, if you will, that investors can follow and be excited about. So we looked at that slide previously. Mark was showing some of the key milestones. We are preparing in the near term to release a 43-101 technical report on the Hellyer project. So that's speaking to a different approach, providing independent OpEx and CapEx estimates, independently validated OpEx and CapEx estimates, great detail on the resource, how we're going to develop the project. So we have changed a little bit. We think, really providing a much more sort of comprehensive and effective and efficient way of developing the Hellyer project. And we think we'll take this approach with the rest of our projects as well. Massive market that we're capitalizing on, $3.5 trillion worth of metals contained in mine tailings, up to 325 sites that we've looked at, about 4% have made the cut. So if you kind of start thinking about market penetration, and if you really think about, Mark was highlighting the 3 projects that are kind of our tier 1 projects, which are Hellyer, Buckens, and Mexico. These are all VMS, highly pyritic, essentially refractory ores. And that's really where the sweet spot that we found is. So, we do think that there's a tremendous amount of opportunity out there. And we think that once we get the Hellyer project into production, we get Mexico into production, we think there's going to be a tremendous opportunity to scale, not just through implementing the projects sort of, consistent with the Hellyer model, but also by licensing our intellectual property to other operators, including even primary extraction operators, to improve their efficiencies and recovery. Red Cloud does have a buy rating on us right now at 80 cents a share. It's about a 4x upside from where we currently are. And I saw some comments there on the share price, and it's worth mentioning. I mean, look, the markets are tough right now for small companies. We've declined pretty much in line with our index. If you look at the Canadian Securities Exchange Index, it's obviously been a little bit of a challenging time for small companies. That being said, and I think as the analyst report shows, and the buy rating shows, and the target price shows, as we continue to execute and move towards generating free cash flow, as we sign up additional projects, we definitely expect there to be, we expect those milestones and that execution to be reflected in our share price going forward. So, obviously all of us are heavily invested in the company. Management and insiders hold about half the company, so we're committed. And we're here to create long-term value for shareholders. short-term volatility in the markets notwithstanding. We do have a tremendous IP roadmap. We talked about that a little bit. It gives really excellent opportunities in the near term to generate free cash flow, but then going forward, it's going to unlock other revenue streams for us, sort of looking 2024, 2025 and beyond. And sort of to just emphasize this point, ESG has become a little bit of a buzzword, maybe a little bit of a dirty word for some people. But ultimately, we do think that the fact that we are transforming waste into a resource really makes us sort of a pure play, ESG company. And, not just sort of, because we're greenwashing, but because we really are leaving every site better than how we found it. And hopefully in the Q&A, we can talk a little bit about how our technology at the Hellyer Project, not only is it generating free cash, it's also reducing the environmental liabilities for the site owner, which is pretty exciting. So I'll just wrap up with a quick overview of the team. Again, Hellyer is a very attractive asset, but our biggest asset is our team. This is where the magic happens. We're led by Dr. Mark Thorpe. I always enjoy the ability to sort of present the team slides because Mark's a bit humble, but an amazing leader for us, 35 years of experience in over 35 countries, PhD in mineland rehabilitation. He's chair of the board of the Canada Mining Innovation Council, our chief technology officer, chief geologist, chief operations officer, chief metallurgist. These are people who, all of them, I'm sort of the youngest guy on the team, so we joke about it, but these are all people who, frankly, have been in the business as long as I've been alive, and are really able to leverage that experience to create value for our shareholders and for our projects. So a pretty special team. The commercial management team also very strong. So where the technical team has sort of a strong, mining, metallurgy, technology background, commercially our backgrounds are really finance, management, consulting. Our chief financial officer, Zoya Sheshkova, currently taking some much needed downtime. Deloitte EY background before leading financial initiatives at some really exciting high growth resource companies. And then finally, our board of directors, a great and diverse group on the board, strong governance. You see there on the left, our independent chairman, Mr. Alan Bazanson, one of our major shareholders, recently announced as the independent chairman. Prior to that, our founder, David Cam, was the chairman of the board. And while he still remains our largest shareholder and is still a member of the board as an executive director, we felt like having that extra independence at the chairman level was important from a governance standpoint. When you look across the board, we've got a great mix of people. Harold Wolkin, 25 years at BMO, was the head of diversified industries there. Philippa Veris, one of Women in Mining UK's top 100 inspirational women in mining. Bruce Higson-Smith, capital markets leader in the resource sector. And then Mr. Phil Cray, who's a renowned lawyer in Australia and New Zealand, the founding partner of a large law firm down there. So we've got a great group of sort of technical expertise, capital markets expertise, and legal expertise. And we think that this positions us strategically to deliver value and really provide shareholders with the quality of governance that investors expect nowadays. We do have some standard disclaimers and disclosures here. These are available on our website. And I think with that, we can turn it back over to you, Kobe. Unless, Mark, you wanted to kind of close us out with a couple of comments before we get into the Q&A.
Thanks, JC. Very well summarized, and really the opportunity here for the application of technology to solve environmental issues while addressing the need for critical and strategic metals couldn't play better into the current market and the current thinking around the world. We're right on the edge of a massive opportunity. We've got the technology that will address it, and at the same time, we're able to reduce environmental liabilities while supplying metals that we all need for a prosperous society for the future. So with that, I'd like to thank Kobe, and I'd like to thank JC today, and we'll turn it over to Kobe for questions. Thank you.
Awesome. Well done, guys. Thanks for another very informative presentation. So we'll now start off with the Q&A portion. And just a reminder to everyone on the line that you could type your questions into the chat box at any time. And JC, you answered some of these questions during your presentation. Someone here, just to kick things off, someone wants to know if this presentation will be made available online.
We'll upload this exact presentation today.
Okay, awesome.
Yeah.
So there you go. So I'll keep this, this second question broad here. I believe the last time we had you here for a webinar, that was all the way in January. So, 7-8 months ago. Broadly speaking, what's changed since then?
I'll answer that one. Kobe, thanks very much. Since we were last in January, it seems like just a blink of the eye for us because we've been so busy building the projects. I mean, we signed up Helia. That's probably the biggest thing since the last webinar that we did. Obviously, the ongoing development of the Helia process and the technology, the validation of that in the third-party lab at Core Resources, and then the further validation that we just completed in the last couple of months at our lab in Tingalpa really go to strengthen the position that we are. Team's been working really, really hard to get out a technical report, and as JC mentioned, we expect that forthcoming in the very near future. And then we're very excited to get on with the pilot plant and the engineering design. We've been really fortunate to be able to work together with an amazing group, and so those are the big highlights: Helia and getting the technology advanced, and obviously we're in the throes of finalizing the purchase of some other IP as well to broaden our portfolio of applicable technologies. So really exciting, Kobe. Thank you.
Okay.
I'll just add a little bit onto that.
Oh, go ahead, JC.
Yeah, just talk a little bit about the project pipeline. I mean, we're very focused on generating free cash flow at Hellyer. That's clearly the opportunity that is the most valuable, the most interesting for our shareholders. And Mark mentioned we've made a lot of progress there. We've signed Hellyer up to the definitive agreement, the pilot, the technical work, the recovery rates, all of that independent, and the technical report that's forthcoming. However, we've also advanced our project pipeline significantly.
Thank you.
We've done metallurgical analysis at multiple projects. We have 2 projects in Mexico that are in advanced late-stage commercial negotiations, one of which will likely be announced in the 4th quarter, maybe even early the 4th quarter. So we've advanced the project pipeline substantially. We've also done some initial exploration work at the Buckins project. We announced earlier this year the geophysical survey, which indicated basically strong indications of the tailings resource that is at the Buckins project. And I'll just comment real quick on the Buckins project because I think some of you who have been following our story have heard of Buckins before. We are in a little bit of a strategic pause with Buckins because when you look at the characteristics that we prioritize for our projects, it comes down to, in addition to tons and grade and metallurgy, it comes down to infrastructure and permits. Buckins is, we think, a very exciting project. It's also a project that's going to require a little bit more work from the permitting standpoint and the resource definition standpoint. The great thing about the Hellyer project is the resource is very well defined. We'll have our forthcoming technical report that'll detail more on the resource, but it's been well studied. There's been multiple JORC resource reports that have been produced for that project. And it's currently an operational site. There's infrastructure, there's water, there's power. Mark likes to use the analogy of us being basically like a catalytic converter to come in and sort of bolt on to the infrastructure there. And so we're prioritizing projects that have those characteristics that allow us to generate cash quickly. Both of the projects we're looking at in Mexico are similar permitted platforms with infrastructure, providing sort of that fast pathway to free cash flow. So those are the projects that we're prioritizing. I just wanted to add to that, Kobe, that there's been a lot of work in the project pipeline as well.
Okay, great. So that was a lot, but just taking a step back, you're focused on acquiring the mineral reprocessing rights to tailings projects, forming profit sharing agreements with the owner rather than owning the asset outright. So, it sounds like a win-win scenario. I'm curious though, is this a strategy that you're firm on, or do you think there's some flexibility?
Owning the assets, avoiding some of the liabilities. One of the key things with the Hellyer project is we received the tailings from the current operations. we reprocess them, recover the metals, hand those tailings back to the site owner so they have that liability. Now it's a reduced liability because of the way our process works, but if there was a compelling reason to do something different for a project in the future, we could certainly consider that. The one thing I would say that we could look at, perhaps more likely than owning the asset, is developing into more of sort of an intellectual property royalty model to attain scale and create some additional revenues.
Yeah, that actually feeds nicely into my next two questions here. So, your technology has been shown in the lab to greatly improve recoveries. Does it apply only to tailings? Is there any reason you couldn't use this technology, at the mine to mill level as opposed to just the tailings?
I think the big opportunity here, Kobe, is to actually look at newer projects that are marginal with VMS ores underground. So with conventional VMS processing technology, flotation, we would be able to apply our technology directly to the back end of a current mill or a brand new mill. So I have had phone calls from people asking me if we can help them with the design of new projects. If you think that you could probably get an extra, we get extra revenue from our process on the profit share, or you could get extra metal recovery, and you would license the process and the IP from us, then it changes the economics of the underground significantly. If you look at Helia, for instance, the additional revenues that we generate from the Helia process, if they were to restart the underground, the net cash flows would be significantly increased because we would have our process at the end of their initial plant. So the opportunities there are tremendous, both as a bolt-on to an existing processing plant, reprocessing a tailings pond, an old tailings pond that's been sitting dormant for many, many years, or right at the very front, right at the very start of a project, so that we're actually talking to another group who are looking to develop a mine in Central America, and they're interested in talking to us because they think that our process can significantly improve their revenues and hence the underground economics.
Gotcha. Okay, so room for more than one path to deploy your technology.
Absolutely.
So and you both somewhat touched on this, with ESG being such a hot topic, the hot topic that it is. Can you touch more on how it is that you're reducing environmental liabilities, with VMS tailings in particular?
Of course, thank you. The VMS tailings, for those of you who are not too familiar with them, are large sulfides, and that's traditionally known as fool's gold. But in environmental liability terms, it has to be kept submerged under about 2 meters of water to prevent acid generation. We actually take the tailings and we break down the pyrite. So we actually oxidize the pyrite to liberate the silver and the gold, and that then comes out. So having no pyrite in the tailings that come from our process means that, one, the tailings have got less potential for environmental acid generation and that sort of thing, so they can be closed in a conventional way, in a dry stack. The second thing, and the nice thing particularly at a place like Helia, is that the loading of heavy metals in the tailings is much less because we're producing the lead concentrate, the copper concentrate, and the zinc concentrate when we get everything up and running. And then the third piece is that some of the deleterious metals, such as arsenic, are precipitated out in a stable form, so they're no longer available in the environment. So looking at the Helia current closure plan, it currently needs to have 2 meters of water above it. After we've reprocessed the tailings through our process, we should be able to close it out dry with the arsenic precipitated in a stable form and regrow the forest, which is adjacent to the Helia project right over there.
for example?
It breaks down for the Helia process. It's addressing galena, chalcopyrite, arsenopyrite, and regular iron pyrite. So it works right across the board, and it attacks the different pyrites differentially. So, for instance, at Helia, the lead comes into solution first, and followed by the zinc, and then followed by the iron. It's a very nice sequential process that addresses it's actually addressing the stability of each of the pyrite forms. So yes, it goes across all of in this particular case, particularly at Helia, it goes across all of the different forms of pyrite and brings those base metals into solution. Once they're into solution, then you can recover them. It's very nice.
Okay, interesting. Okay, so, lots of talk on Hellyer. You're planning to do a pilot plant now. So tell us about that pilot. And will this pilot be taking place in the field or in a lab?
It's what we're planning right now is the ALS lab over in Perth has a pilot plant. We've got a quotation for the running of that particular pilot over there, and it's one that ALS are very, very good at. They've run it, they've run pilot plants before, and we're really excited because it'll provide us with that 100 kilo a day validation of the process as we move into the detailed engineering.
And you'll be testing the actual Hellyer tailings, right?
Absolutely, 100%. We'll be shipping it from Helia across there. Okay. And it'll be a composite of tailings so that we're not high grading or anything like that. It'll be fully validated by QPs, external QPs, of course. And that will contribute nicely to the PFS that we intend to publish shortly thereafter.
Okay, and correct me if I'm wrong. I believe you're planning on using modular plants here that are roughly, 500 tons a day each capacity. So, what kind of scale are we expecting for this pilot plant, and what are some of the challenges with scaling up this pilot to reach this 500 ton per day target?
The nice thing about the pilot plant in Perth is that it's a continuous operation. So many of the processes that are built for mines around the world are just based on batching of materials. The pilot plant in Perth will also do full recycling of all the catalysts, so that we'll get the proper replication of all of the pieces. So we anticipate a fairly smooth transition. One of the key things that we have on the pilot plant design and the input to the pilot plant is obviously a close link with the Sedgman engineers. Sedgman engineers will be brought in to make sure that ALS is designing it and building it so that all the data that Sedgman requires to transition to the construction and operation of the full-size plant, the 500-ton plant, will be captured at that particular point. So obviously scaling is something that needs to be addressed, but we don't anticipate it because continuous process to continuous process, we feel it's an appropriate way to go.
Okay. But do you have an idea, what kind of numbers are you looking at for
100 kilos a day? 100 kilos a day would be the pilot plant, yeah. Most of the bench scale work that we've done so far has been about 10 kilos a day, and in that 10 kilos per batch. We've done some recycling of acids in the lab, which proved up all of the thoughts that we've done. So we're very pleased with the current output from our Tingalpa lab, and we've been able to continuously recycle the acids, and that was the critical component that we wanted to validate.
Great. And you mentioned that you're working on a PEA and that we'll be seeing those numbers shortly. Who's writing it? And, when exactly can we expect it, do you think?
The team is writing it with independent QPs. We've got a QP out of British Columbia doing the geology, QP out of Australia doing the general pieces, if you like, the infrastructure, etc. And our metallurgical QP is out of Arizona. So it's a collective effort, tremendous work by the team, and really consolidates all of the work that we've done for the last 2 years, plus all of the previous work that's been done on the project. So we're very excited to have that one out in the very near future.
Yeah, I imagine I'm impressed, honestly, with how quick from decision to make a PEA to actually getting it out. Is that just a function of your in-house capabilities, or is it a function of the consultants that you're working with?
It's a combination of the two, Kobe. I mean, when you look at our team and you look at the breadth of experience that they have, for me, pulling together documents of this nature is just something that I do, and I'm pretty good at it. I've pulling big EISs together, pulling these technical reports. But yeah, we just decided that we were going to get it done and focused on it. And the QPs, our external QPs were excellent, are excellent. There is no way that we could have done it without them. So kudos to the team, and kudos to the fact that we really got some great QPs to work with us.
For sure.
Yeah, I'll just add to that. It's, the speed, to Mark's point, is definitely a function and part of our in-house capabilities. And we think going forward, leveraging the stage gate approach, we'll be able to produce technical reports much faster than expected because of that in-house expertise. You saw our technical team. But just to highlight this too, a huge amount of work has been done on the Hellyer project. And that's where we think there's a benefit to taking the staged approach, releasing that information in a technical report. Investors didn't understand the level of detailed work that had been done. So part of it was, yeah, absolutely, we've got a fantastic team in-house. Couldn't have done it even remotely in the time that we did without that. But it's reflecting also the detailed technical work that's been done over the last 18 months plus.
Thanks, JC. Yeah, excellent comment. Yeah.
Right. Yeah, so it's, yeah, okay, well said. So, talking about studies here, what kind of level of study do you think you need in order to obtain project financing? And what level of study do you want to get to before you actually go ahead with a production decision, whether it's a PFS or whether it's a DFS?
We'll be doing both. Kobe, I'm a firm believer in putting the information out and into the public as quickly as possible on all of these projects. We just need a little bit of additional validation on the process, on the metallurgy, to get us to the PFS. We will also do some variability sampling across the tailings. Our geologist, Ian Hodkinson, will go down and supervise that work. And then the engineering, we'll get to a BFS fairly quickly with Sedgman. We will, in parallel to that, start looking for project financing. So I think, personally, I think the PFS will give us the leverage that we need to really start to generate the interest in the 500 ton a day plant. It's a tremendous project. The process is elegant in its simplicity. Acid leach to dissolve the base metals, to break open the pyrite, to liberate the gold and the silver. Gold and the silver doesn't dissolve in the acid. Base metals do. We produce the base metals, and then we leach the gold and the silver out of the residue. It's very elegant. And the fact that we're able to do it at relatively low temperature, self-generated exothermic reaction, and the fact that we're able to do it at atmospheric pressure makes the operation much easier to handle.
JC mentioned it before, that work there was halted. It seems like it's mostly due to permit issues. Can you give us some more color as to what happened and when we can expect work to resume there?
Yeah, thanks, Kobe. JC, do you want to take that? Or
Yeah, I'm happy to take that. Yeah, so I wouldn't say that we had permit issues there. I think one of the questions that we get quite frequently when we present to investors is, well, tell us about how you're leveraging government support. Are there government subsidies available for what you're doing because of the fact that you're, reducing environmental liabilities and sort of, mitigating, the environmental footprint of legacy mining. And one of the comments we like to make is that the support that we've seen from regulators to date has been very strong in arguably the most valuable form possible, right? We're not talking subsidies, we're talking about stakeholder engagement and alignment on the permitting. So if you look at our exploration permit for Buckens, we got it in 6 weeks. I mean, that's unheard of. And that's because we do have great relationships with regulators. So, we don't think there's going to be permitting issues at Buckens. It's just the reality that Buckens has a longer development timeline. It's more of a brownfield site. There was legacy mining there. There's some older tailing storage facilities we've looked at potentially using for our operations. But when you compare that to Hellyer, when you compare that to the projects we're looking at in Mexico that are already permitted, already infrastructured from an operational standpoint, it just makes sense to prioritize those projects now in terms of ROI. So it's all about generating free cash flow as quickly as possible. Buckens, we still have the agreement there. We still are excited about the project, but generating high ROI, getting the cash flow as quickly as possible, we think that's what our investors want. That's what we're focused on.
Gotcha. So it sounds like, the answer to the question, when can we expect work to resume? It's after you got Hellyer going.
Yeah, that's exactly right. Yeah. And frankly, we think, Hellyer and probably also a Mexico project, because those are the near-term ones.
Okay. Gotcha. Okay. So, how much cash do you guys have right now, and how much do you need, to get you to that project financing stage?
Yeah, we can disclose our most recent filing from end of June, which 1.8 million US was what we had in the till. In terms of how much we need to get to definitive feasibility, probably on the area of $4 to $5 million to get us all the way through to definitive feasibility and do a little bit of business development work there as well.
Okay, gotcha. So that's good color. And any hints as to what's to come from the remaining pipeline assets?
Reduced environmental liability and better metal recoveries. Kobe, that's a very high level view. One of the things that we're looking at with the first Mexico project is when we start working with the current operator, it'll be a similar development timeline to that for for Helia. We have already done some initial testing in our lab. The initial results showed very good base metal and precious metal recoveries. We anticipate being able to shorten the overall project development lifetime from start to putting into production to within 18 months. So as soon as we get signed up on that one, we'll run our initial bench scale work at our Tingalpa lab, which will be followed up by a pilot plant similar to the one that we're looking at with ALS, and then the engineering design and implementation. So very excited on that one. Everybody looks at mining projects as, where is it? Is it 5 years out? Is it 10 years out? Is it 15 years out? We're looking at projects that are less than 2 years to cash flow. And to have that opportunity in the ESG clean tech space is tremendous, and it's a tremendous opportunity for the people who are investing in the technology and the team.
Okay, and with that, we got one more question here, and interestingly, won't say who it is, but he's the CEO of another company that's also looking to do some tailings work. So
I think he's doing a great job with it too. He is doing a tremendous job. They've got an exciting project.
He's wondering what your next catalysts are for Q4, and I'll just add to that Q4 and beyond.
JC?
Yeah. The big one that I would look for in the very near term is the 43-101 technical report. We also expect to announce another tailings commercial agreement in the fourth quarter, which will be another big announcement. and then we'll look to implement that independent ALS pilot in the fourth quarter as well. So we think we'll have a pretty meaty fourth quarter. And the fourth one I would add in there would be the expansion of our intellectual property portfolio. So sort of 4 really substantial operational and business development milestones for us in the fourth quarter.
Great. And, with that, I think that's a good place to leave it. So, Mark and JC, thank you for joining us today. As always, it's a pleasure hosting you. And to our viewers, if you want to learn our thoughts on EnviroGold as well as other companies that we watch, we do publish all of our research on our website. It's free of charge. If you're ever curious about those estimates that are posted Pacific, Taylor Combaluzier will be sitting down with Grey Cliff Exploration. Again, that's Tuesday, October 11th, 12 p.m. Eastern, 9 a.m. Pacific. Thanks, everyone, for tuning in, and have a great day.